The market has been waiting for the Volcker rule to be voted on. Well, they're going to have to wait one more day because of inclement weather. The vote has been rescheduled. We don't know when, but it was canceled for today. The question is if this rule takes place, if the vote goes forward, what's the effect going to be on the financial services firms? Well, joining me now is Brian Jacobsen. He's the Chief Portfolio Strategist at Wells Fargo Funds Management. So, Brian, there's a lot of talk about this rule and how it's going to really put some constraints around the financial services group and hurt their risk taking. Is that a good thing or is that a bad thing?
Well, I think it all depends upon the sort of details that come out. A lot of banks have already been sort of anticipating the Volcker rule, and that's one of the reasons why I think that you've actually seen somewhat of a decline in trading volumes and the such. People have been sort of preparing for this just because we're not exactly certain as to what the rule will be and then also what the implementation time period will be. So a lot of the bigger banks already realized that it was probably prudent to rein in some of the proprietary trading and some of the other riskier activities. My big concern is that this isn't necessarily going to be the final rule, that it's just instead of constraining activity, it might actually just add another dimension of complexity to the sort of activity that banks undertake.
In adding the complexity, you mean starting to make the rules and regs around that type of trading so difficult to follow that it makes it harder for them to actually do the trading?
Yes, and that is actually one of the histories of regulation in general, is that oftentimes a rule is implemented, but then whoever the rule applies to, they find ways around it, or there's new innovations. And so one of the problems with regulations is the regulators are oftentimes behind the ball. They don't exactly have the incentive to find a way to make the regulations do what the intention is. And there's also that nasty law of unintended consequences, or as I like to call it, the law of not thinking things through as to what is it that the actual implication will be. If we see a dramatic decline in trading volumes, market making activity, and also shifting of risk off of the bank's balance sheets more onto the client's balance sheets, that might have undesirable side effects.
Well, you're right. For every action, there is reaction. And we do know that the traders will always find a way to get their trades done within that framework of rules. So what are you hearing as far as this rule? Now, if they vote on it, what is our next time frame?
Well, that's the problem, is we don't exactly know what the time frame is going to be as far as it's going to be open for public comment. It's already been open for some public comment. There's been some feedback. So this is a conversation between regulators and the regulated. One of the problems, though, is what time frame will this be implemented? We've already seen with the Dodd-Frank regulations in general, the Federal Reserve has come out and said, you know, we have to really wait to do this because we don't have enough information. You can't just say, hey, have these rules in place and enforced by a particular time period. It sort of has to evolve. One of the big things that I've heard from the portfolio managers when they're looking at investment opportunities is that some of the smaller banks are afraid that they might get caught up in the rules as sort of an unfortunate side effect of implementing the rules. If it's actually designed to constrain the trading activity of more of the investment banking arms or prop desks of the bigger banks, is it going to have some unintended side effects on smaller banks? So that's one of the big concerns right now, is what effect is this going to have on the profitability and the competitive landscape of the banking sector in general?
All right. Well, thank you, Brian. I think investors will have to be very careful if they start to get into financial stocks while this is happening. That's Brian Jacobsen from Wells Fargo, and I'm Deborah Borchardt with The Street.